This is Sayed Option. This is my class for option rules, what not to do and what to avoid. Because I always tell people, it's easy to make money in option, but it's much easier to lose. So if you can learn the rules of not how to not lose money, how can you avoid, those, so then you can be golden and just focus on making the money. So I created 6 pages PDF files, which I'm going to share at the bottom of the video in the description, and you can see all the topics, and I'm gonna go all over each one of them and tell you my stories and tell you the lessons that I learned, so hopefully it can help you to avoid the losses or avoid the bad days, so you can just focus on the good days. So number one topic is position size. I mean, the most important thing I think in option trading after you learn how to trade is position size. One of my biggest mistake at the early trading days was that I was always going all in. For example, I see, oh, Apple is rising, and then I go all in, but my timing was wrong. And then, I come out with like, maybe I go in like 30,000, and then I come out with $5,000 loss, and then later on end up that if I would have held it would be 60,000, or I would have held it longer until it goes zero, and I'm like, oh, I got it screwed. So the most important thing is your position size. And one of the rules that I personally learned from many traders is like the 80-20 rule, which is like always play with 20%, especially if you're trading option. Always, play with 20%. So, for example, if you have like, let's say 20,000 or 30,000 or 50,000, whatever you have, just take 20% of it and make sure you never go above it. Let's say during the day you have a $50,000 account, and then you only play with 10,000. So during the day, maybe you go to 20,000, maybe you go to 15,000, but at any moment you make sure that you bear the risk, like you be ready. Maybe there is suddenly there be a sudden pullback, maybe the sudden news comes out and goes against you, so you should always be prepared to book losses fast, or like when you hold the position overnight, it shouldn't be too big that if it goes against you it breaks you. So always keep in mind, stick to the 20% maximum. I personally sometimes even do 10% or 5% or much lower, and with that percentage I've been surviving longer than before. Yes, sometimes I had an account from 8,000 wins to 40,000, but 1,000 other times I had an account from 30,000 goes to zero. So it's really important, position size. That's really important. Now, and number two is, you have to have a maximum or minimum. You cannot play, one hand 2,000 and another bit like 5,000, and then another bit you play 500. Let's say, on the 5,000 you lose 10%. That's $500. But on the $500 you make, like, let's make you make 100%. That's, you made only $500. But it's just doesn't make sense. I hope you understand that the percentage win of is really important. You have to have a maximum and minimum. You cannot play one hand $10,000 and another hand $1,000. Well, it depends on the name. If it's an unknown name, you don't want to risk too much. Yes, you can play lower. But let's say on the same name, like Apple, like one day is rising up, you play $5,000-6,000, and then one day is going up again, but you play $2,000, or reverse. So you always have to keep in mind, when you trade option, you have to have a maximum and minimum, and you have to know your max, your minimum. And because if something is not worth playing and something you want to play with the small, it's just lottery. It's just not worth your time, not worth your risk. So you should know what's your maximum and minimum, and you shouldn't go above your maximum. And below your minimum, it's not worth your risk, your time, or your effort, or your energy, or everything else. And the reward you get because you play so small, it can be very small, and then later you're gonna regret, oh, why I didn't play bigger. So you should know your maximum and minimum for sure. And by different time of the year, different type of the market, if it's a bullish market, if it's a bearish market, if it's a consolidation market, yes, you can change the size of your play. Let's say, for example, in last month sometimes I played that 10,000 or $15,000 hand, but now I really avoid it. I try not even go above 4 or 5. 6 is too much for me right now. Or like before I even played 2-3,000. So it depends on the market situation. Market, if it's really good, yeah, play bigger, why not? But if market is turning bad, the options are getting killed, the premium is going down, the news are coming back, the environment is not good, so you want to play lower and lower. You want to bring your size lower until the environment becomes better. Anyway, going back to the notes, know your limit. Know your limit, like what can you afford to lose and what can you afford to win. Okay, there is no limit how much you can win. There is infinity. You can, the option price can go as much as once. I've seen option going 50,000% up. Okay, but the bottom line is the option can go to zero. So you should know your limit. Like if something is going down 10%, 20%, and it's bothering you, that means you're playing big. If you have a loss like 1,000, 2,000, and it's really bothering you, that means you have to reduce your size. Okay, I always tell people, if they're mad, if they're pissed, if they're like upset that because of their losses, that means they played big. If you are nervous, if your heart is pumping, that means you got really near expiration, or you played too big that you're too much scared. Okay, so another thing is, sometimes market is running, but there is one name that is running super faster, and there's not one name that you already bought position is going slower. So I always say, don't put all your eggs in your one basket, because I have personally have experience of having a big loss because of doing that. So it's better, like let's say if you have a $50,000 account and your 20% is 12,000, so and you don't want to play more than 10, for example. Let's say the whole market is running and you see Apple is running and you get Apple, but then you see Apple is not running as strong as it should, but other names are running. Then you see, oh, Amazon is running more, so you put another money in Amazon. So that's why I say, always diversify. Like, let's say put 3-4 thousand in Apple, 3-4 thousand in Amazon, and let's say if another name comes up, you can put another 3-4 thousand in that and get out of the Apple, or reduce the Apple because Apple is not going strong. Okay, so and as I said, whenever you see markets is slow down. Not always, a car can run full speed. Sometimes you have to park, sometimes you have to slow down, sometimes you have to get gas. And I always, compare trading option with the driving a car. Sometimes you have to go full speed in the highway, non-stop. Sometimes you have to change lane, change from one lane to another lane. Sometimes you have to just park and wait, for the green light to come. Until it's not green, you just wait. So, you know, don't quit, but you can play smaller until market gets better. So another thing is, whenever you enter a trade, you always want to know, the most important thing is the entry point. Where is a good entry? Where is a good exit time? So you always want to have the target. And when a name gets to your target, you don't want to play bigger after your target reach, because it might have a hard pullback when it gets to your target, or it may go higher. But the chances of having a pullback or consolidating is much higher than suddenly going higher than that. So, and you always can buy back. You can play with profit. But one thing that is really important is, I personally lost a lot of money, that after making money like one time, two times, and then the third time I was like going above my target, like near the target, I said, oh my god, it's gonna go higher. Then I buy again, and then boom, suddenly it pulls back, all my profit is gone. Now I'm in the loss. Now I'm scared. Now I'm hoping like, oh, it's gonna go back. It never goes back, and I lost more, and I end up negative on that, playing on that name that day. And I'm like, why the heck I played the third time? So there is a rule that people say, never chase. If something is running more higher and then it's going above your target, and right now you're afraid, don't play it. You already made your money. Be happy with it. Always say, be happy with green you already made. So yeah, whenever it gets to your target and it's going above the target, play a smaller size, play with the profit, and have a tight stop loss to avoid sudden losses, or stop holding overnight, because it's already reached your target. Anytime can pull back. And yeah, so I personally blew up a lot of my accounts many times in last 11 years, but last 2 years was not that much. So especially last 1 year, I learned the lesson that have a base position size. If you have a base position size, then even if you have a bad day or bad week or bad months, you still can survive and continue go to next month. But if you just you still play big, and then you go bigger and bigger, then suddenly on 1-2 weeks you can blow up your account, and then if third week market gets better, you don't have any money left to play. You know, like let's say you have the 50,000, and then in 1 2 weeks you blow it up to 25,000, and then in another week you blow it down less than 25. Now you cannot day trade. Now you have to hold overnight, and then you're scared. And then even if market runs, you cannot play, and even you cannot day trade. And then you may buy the wrong thing at the wrong time. It's already run the over, and then because you have too much fear, you will lose even if market performs better. And it's too difficult to go from like 20 to 50, but it's very easy to go from if your account was 50 and became to 40, it's easy to from 40 go to 60 because you're not too much down. You have to keep in the percentage in your mind. So another thing is to keep in mind is when you trade option, there is two things to know your size. Are you a big account holder or you're a small account holder? For example, are you having a $1,000, $500, or less than $5,000 in your account? Or if you have a $50,000 account or a $100,000 account, so it's different risks. If somebody who has a $100,000 account, yes, that person can afford buying, the expensive option of Tesla or Amazon or, other expensive options, price premiums. But if you don't have that, then you have to stick to, if you have like $1,000 or $2,000, you have to stick to the lower premiums. You have to stick to SPY, QQQ, or IWM. You should play with the ETFs, which are cheaper, and you still have the same volatility. It can give you a good return on a good day, but the return is much better on them. So keep in mind, know your size, and even if you have 1,000, 2,000, or 5,000, it's still consider the 20%, because if you have only 5,000 and suddenly you go in a trade for $3,000 and that 3,000 goes $1,000 down, you already lost 20% of your account. You know how difficult it's going to be to survive that. So to return that, yes, you have to play another lotto, and then maybe it doesn't turn, maybe it does. If it doesn't, then it goes much lower. Then suddenly you open your eyes, in 1 week your account is zero. You have to deposit money, and that's pretty much depressing. So as I always say, know your size, know how to play, know the account size, know your capacity, know your risk tolerance. Is your risk tolerance $10,000? Is your risk tolerance $500? What is your risk? Somebody who goes with 10,000 and goes $100 down gets scared. So this kind of person shouldn't play option. Somebody goes with 2,000 and goes to 1,000, doesn't care because he has a bigger account. So that 1,000 may go up, may go down, but he doesn't care because he can make it bigger later. So what I'm saying is, it depends how much risk tolerance you have. Okay. Another thing in option is another thing that a lot of people, including me, that I lost a lot of money on it before, is playing lottery on Friday. Friday, especially Thursday late afternoon, is one of the worst times to play option the same week. I personally made a huge wins on those days. At the same time, I made my biggest losses. So I put a set rule that for myself, that after Wednesday afternoon, or even sometimes very rarely Thursday, very rarely I do that, but usually on Thursday and Friday, that's my limit. I go play next week option. I don't care what happens. I don't care if the option is $1 goes to $10, whatever happens, I don't do it unless I had, like, let's say I had a very green week, and I'm like, let's say I made $5,000 in that week, or $7,000 or $10,000 in that week, and let's say, okay, it's a good Friday, I can see there's a good chance for lottos, and I play with maybe $200-300. So if I make like about $5,000 in that week, I don't mind losing $1,000 on Friday. So I will put a limit like $200-300, $400, very low limit. Okay. So number one lesson is, I always tell people, do not play lotteries. Okay. But if you decide to do, you have to know which size to go. You cannot play the same size that you play option on Monday. You play that on Friday, because it's expiring in a couple hours. And especially if you play out of the money, you're just talking about handing free money. So you're just trashing the money in the trash. So yeah, lotto play, I always advise people, don't do it. Even I experienced for 12 years, I try not to touch it, because the risk is too high, the damage it does to your health is too much, makes your heart pumping so big. so high, and then it's not worth it. Honest, it's not worth the gain. You especially like, let's say for example, you play with $500. Okay, let's say you play with $500, and then your $500 turns to $2,000. Okay, in a stock that runs 3% in the Friday, for example. Okay, you can play instead of $500. You can play with the $5,000, buy the next week options, and that 5,000 maybe turns to 7,000. Yes, you put a bigger money. You made less percentage return, but you had less risk. You could have hold it longer. You don't care about if it's going up and down that much because you have still 8 days to go, 6 days to go. And then at the same time, if you decide end of the day to hold it longer, you can do that. But if you have a Friday expiration, you get just too much stress. And trust me, I've seen people quit option trading not because they lost, because they couldn't bear the stress that they get. And one day, this stress can kill you. It can cause you to lose money, or cause you to make a bigger risk, or it can cause you to make a bad mistake and lose your funds, lose your money, lose your capital. Anyway, and the next topic is bearish the strategy. When you just so you know, I may show some charts, and I have here my watch lists. This is my indexes. These are my main names that I watch, and this is my position. I'm already holding a skew, and this is my master watch list of 500 names. So the timelines I have here again is 1 min, 5 min, 15, 30, 1 hour, 4 hour, daily and weekly. Just want to let you know, the thing is in market, you want to know your strategy. Are you a day trader? Are you a long-term player? Are you short-term player? Like let's say you have to know your time horizon. Are you a 1 week investor? Are you a monthly investor? Are you a quarterly investor? Are you a yearly investor? Are you a couple day investor? You have to know your time frame. Somebody like me, these days I invest very short term, so I know my risk. I know my method. You should know yours. Everybody should know theirs. For example, and then when you know your strategy, then you can, based on market performance, you can play that way. Okay, for example, somebody who's a monthly, who's a long-term investor. Okay, this kind of person, when he sees there is a golden cross a monthly, say, oh, okay, there's a golden cross here, I can buy here. So he buys here, and then here before the TTM squeeze, gets these drops, or before this drop, starts get accelerating, it gets out. And then once again you get the this is monthly, so let's go to daily. I can show you guys better there. Let's if you are a long-term investor, the monthly is already uptrend. Okay, so let's say here, and then you were holding long-term, super long, but once you see like 2-3 days and the monthly, sudden daily is getting, you can get out right away. Okay, if you have a stock, if you have option, you already premium is too much down. But that's why option, it's always best to play short term. I rarely see people do option long terms. Most of the people who trade options, they do short term. I don't see somebody who hold option like 6 months or 1 year. That's just, I mean, too many things can happen in 6 months or 1 year. Okay, unless crazy situation like Tesla or some other names that suddenly over an extended period of time has a huge run. Okay, so for example here, if you're a long-term investor and you see daily suddenly golden cross, and yeah, it's a good time to go in, buy those long terms until here, then you get a one big red day, you get out. So you can see here, we got couple back bad red days. You see one here, we got another one here, another one here, another one here. Yes, if I was a long-term investor, I would have get out here and buy it cheaper later and hold it again. Same thing for all of them. But it all depends on your strategy. So what I'm saying is, know your strategy, know your time frame. And are you a day trader? Are you a long holder? Are you a weekly holder? And based on your strategy, you have to know what type of size works for you. Okay, for example, if you play a 1 year, you have an account, like let's say you have an account for 50,000 and you day trading. Okay, day trading for 50,000, probably it would be good to play with 2, 3, maximum 4, not more than 5. Okay, in a good market, not more than 5 per play, and not total together is better not to go over 10,000. Okay, so but let's say you want to buy a long-term position for 1 year or 2 year. That depends. You can buy $1,000 1 year play, or you can play $10,000. Okay, it depends. Okay, what it depends, if you play too big, that's become a long play, and that's become like an investment. Okay, and it depends how far are you out of the money and how is the trend. Okay, so for example, if you buy a long-term option, and let's say here, I want to show you guys here, and this is the, I think this is July, yes, yeah. So if you are playing with the option, um, let me find the long option. I show you guys. So let's say we're gonna play. Let me do Amazon actually. Amazon, let's say for 21 January, okay, and we're gonna find 3,500. 3,500. Give me the 3,500. More. Actually, let's do 3,300. Okay. So this is January 2021. Amazon. I just want to show you the chart. Okay. Now let's go to charts. I click on this one. Okay. So let's say you want to play long here. As always, I always tell people, look at all time frames and any play that you play. Okay. So for example, if you look here, let me show you guys. This is all the time frame I have. Okay, so this is 5 min, and I have like Apple like this. Okay, so this is not showing because it's Sunday. I put it on. Actually, let me fix it. Okay, that way is good. Okay, so it shows all the time frame, but remember, you can also look at the options and use all the indicators to realize if something is running. So you see here, this option, you can look at the like here you could buy it at 198, sold it here at 235. Okay, yes, that's too expensive option, but this is what it was possible to make, okay, in one day. And indicators do work on options. So anyway, going back to the topic, I wanted to show you guys this Amazon. So if you, for example, a long-term investor, and then you see Amazon is picking up, you buy this long-term Amazon like it's 97, and look, in matter of like less than 10 days, this option went to 444. And this is when? This is in July, and you already have like 6 months to go, and you went from 100 to 400. So that's like a 4 times 4x. And then later on, you keep this option on the watch. You see, hey, there is a golden cross here again, and this option happens. Okay, when it happens, you grab it again at some point here. You use the lower time frames to find a good entry in these days. Once you get it, you keep it. You buy it at 300, you sell it at 500. And here, same thing again. It's giving us a little bit of reversal. So you see the TTM squeeze going from red to yellow. So at some point, this can be a good buy. And here was a good point to buy at this at bottom. It was 160, and the next day was 250. That was a good investment. Anyway, so what I want to say is, know the market trend. You always want to know your strategy, and then when you know your strategy, and then you know the trend, you can beat the market. It's not too difficult to beat the market. You just have to avoid losing money. So when you and keep in mind, when the trend is down, you want to play puts. When the trend is up, you play calls. If your mind does not allow you to play put, do not play calls hoping for reversal. Okay, so what does trend means? Trend down means this. If you see the the MACD is turning down, is like this, you don't want to touch it. Okay, this is trend down. You don't want to buy a call. Something is like this, and the TTM is squeezed on the rise. Okay, the ball is getting bigger and bigger, the red ball. Okay, you don't want to buy it, and especially if you see the first yellow bar. I mean, there's so many combinations. Anyway, I don't want to get into technical, but in the option rules, Be careful. If the trend is down, don't grab calls. Play the trend. Trend is down, play puts. Trend is up, play calls. If you cannot play put in the downtrend, don't touch calls. Take a break. Wait for the market gets better. This is really, really important. That's another mistake a lot of people make. Market is going down and say, "Oh, buy the dip, buy the dip." It doesn't work all the time. Okay. So another thing is, as I said, do not fight the market. If the market is going down, don't try to be a hero to call the bottom. If the market is going down, let it go down. Wait for a reversal. Wait for everybody says, "Oh, this was the bottom." Wait for hearing the market tell you that I made the bottom. I'm about to go up. Market will tell you exactly when it is. Don't try to predict it. Yes, it's our job, me as a day trading, to predict it. But if you are a new trader, don't do it, because I've lost myself so many times trying to beat the market. Don't beat the market, because market always beats you. It's market job to beat people. It's market job to take money from people. So go with the trend. Don't fight it, and don't switch sides so fast. For example, if something is going up and down, let me show you something. Let's say Apple, for example, is going down. Okay, you don't want to buy put here and then suddenly goes up, buy call, and then it goes up here, you sell your car, and then buy put. No, don't do that. I mean, I could do that, anybody could do that, but how could you know how far it can go up, and when is the right moment to get out, and when is the right moment to switch? And I mean, you just you don't want to do that. So when a car is driving straight, you don't put suddenly in reverse. You either slow down or you push the gas. Slow down or push the gas. You don't put in reverse, suddenly. Same thing, like when your mindset is bullish on one day or the trend is bullish, you don't want to play put, because the put tends to die. The option premiums, the algorithm will kill the premiums on put that day, because the trend is downward. The trend is upward. Okay? Same thing. If a day is a downtrend and the trend is going down and the puts are on the rise, and suddenly you see, oh, there is a sudden rise, it can reverse, and then you buy calls. No, don't do that. Wait for the full confirmation. What is a full confirmation? A full confirmation is like, you see the 15 and 30 MACD, golden crossing both of each other, both of them. That's a full confirmation. You see here, like 15 was golden cross, and then 30 was golden cross, and hourly was already golden cross. So these are a full confirmation that this is going to run up. Okay, so I always tell people to wait for confirmation. And yeah, so do not try to be hero. Don't switch side too fast. If you see a trend is reversing, yeah, switch it. So as I said, in any time of in the stock market, there is always sometimes that goes up. Let me just show you here something. Let me see, 1 hour, 20. Okay, so there is sometimes that comes down like this and goes up and then comes down. So there's always sometimes there's a bottom and there's a top, right? So you should know, it's our job as a day trader to use the technical, find the top and find the bottom. And when it gets to the bottom, it's not the right time to switch side right away super fast. Okay, so you see a stock comes down, goes down like this and goes up, and then it goes down again. So it goes as a wave. When the wave is slowing down, that's not the time that you do anything. That's the time you sit down, sit out, wait for the signal. Is it gonna go lower, or is it gonna consolidate, or is it about to reverse? At this point, it reversed. You see, so it was a good reversal. It was a good buy, but suddenly next day when it opens, it was just right away. You should have sold it. So when you see drop like that. So what I'm saying is, market goes as a wave. When you see it comes to the bottom of the wave, you want to get out if you are put. If it goes to the top of the wave, you want to get out of the call you have and wait for the wave to show you a signal that it wants to go higher, or it wants to reverse, or it wants to consolidate. And based on that, you make a decision. So always pay attention to the wave. Okay, and then when you get out, wait for the next better setup, a better entry to go in. All right. Um, so we have bullet strategy, and we have. Let me click on SPY. We have bullish strategy, and we have bearish strategy. Okay, so what you need to know is that a lot of people in market are always bullish, and the reason is because there is more chances making money in calls than making money in puts. And the other thing is market always lasts longer. um, Bull market always lasts longer than bear market. That's why a lot of people are always bullish. So for example, here in March, yes, market dropped, but how long did it last? 1, 2, 3, 4, 5. So maximum 5 weeks, 1 month. But how long did it take to go up? So you see, since end of the middle of the March, it's close to end of the March until September. So that's like 6 months run. Market was uptrend, and you can see here that the MACD and the weekly finally is about to go dead cross on SPY, which I think we're gonna reverse soon. Anyway, it doesn't matter what I think in the future, but the trend right now is down. I'll wait for more confirmation before I go long, and right now we are close to election, so there is so much uncertainty. All I'm saying is the best run was here. The TTM squeeze went from red to yellow until here, and then over here was just getting overextended. All right. So what I'm saying is, know the market. When the market is bullish, you can be bullish. When the market becomes bearish, play bearish. You see here, market gave you three dark blue, on the TTM squeeze, and then it turns to red. So these times the trend was down very big. Okay, so you should have played. You should put the bear sign up. And so if you are a bull player and market is in the bear situation right now, and if you cannot play a put, then just take a break, take a vacation, because it's that moment that you're gonna lose a lot of money because you cannot trade it. You can't do it. You're not used to it. Your mind cannot do it. For example, somebody who's a CEO of a big company, like multi-billion-dollar company, can this person be a cash register? Can this person go and work as a bank teller, or can this person be a taxi driver? No. Yes, if he push himself, he can do it, but he's not used to it. He can do only big thing. He can be a big boss. Okay, same thing. If you are a trash collector, can you be a big boss? Can you be running a multi-billion-dollar company? No, you cannot, because you're not used to that flow. So if you are a bull player and you cannot play puts, don't do it. That's a big lesson. Um, so another trick is that if something is falling and you don't know how to play puts, you have only a bull mind. You can put a negative in the symbol and type it. That way you can see better, right? Oh wow, this is about the golden cross, so this can maybe go higher, which means can go negative. Okay, so for example here, oh wow, look what happened here. From this, we got a golden cross here in the negative, and then look what happened. Boom, boom, boom. It went all the way up to there. So remember, if you cannot see the charts very well, and when it's dropping, you can just put a negative and use your bullish mind. Just simple trick. And so yeah, if you add another thing is in market you always want to prepare for different type of situation. If the market is going up, if the market is going down, and if the market is consolidating. If the market is consolidating, if you play with bigger size and you hold overnight and you do all these things, you will lose a lot of money because the premiums are getting killed right now. Okay, so you should know what is the market trend, what is your strategy, and know when to sit out. So when there's a consolidation consolidation time of the market, you should play much smaller or sit out or take a vacation. That's the best I can do. Best I can say. And you all, another thing to keep in mind is you need to know when market is premium killing them. It's really important to realize when the market is not moving. For example, let me find a good name to show you. Uh, duh, 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 duh. Let's click on Roku, okay, and let's go on the daily. So for example here, Roku was just going in a box. You see here, in a box of 160 to 140, okay? So this is kind of a big, I mean, time frame, but it still is consolidating, right? But once it breaks it, you see how it goes high. And another one is, let me just zoom out a little bit. So this is what I want to show you. In the Bollinger Band, in any time frame, when you see the top and the bottom, they're all both parallel flat. That means, it's consolidation time. You see here? But then when they get open big and with the direction toward down or up, that means there is a high volatility and there's a high up and down, as you can see here. You see how it's open? The mouth is open, and here the same. It turned flat. You see here at this point it turned flat because it was going between 140 something to 160, okay? But then when it broke here, the Bollinger Band broke, and boom, it made a boom, made a high here, it pulled back and went higher again and made a new all-time high. So you want to keep in mind when something is made a new all-time high and pulling back for a buy opportunity, to go ahead more. So anyway, when you see Bollinger Band is turning flat like that, so you want to avoid it. Let me show you another one. Beyond, actually, was very interesting. Beyond Meat, here, was very interesting. It was for a very, very long time consolidating between 85 to 70. You can see here, October, yes, what day did, October 2000, yeah, October 2019 to January, I think, yeah, January 2020. So that's 3-4 months. It was just consolidating in this range, and then suddenly it broke it. It broke this box, 85, and look, in just a matter of couple days, boom, it went to 155. It's unbelievable. Then it came down again during the Corona time, and bounced back, and the rest. Cup and hold. Anyway, going to the other one is in the market, you should always know when to sit out. So when you see something like this, Bollinger Band is getting tighter, getting flat, that means just sit out, wait for the breakout, wait for the time. You don't want to be an early buyer because why? You don't know how long this is gonna last. Maybe it goes for 2-3 years, maybe it goes for 1 month, but it's always best to wait for the moment because if you try to be an early buyer and that lasts very long or goes against you, then you will lose a lot of money in the premium killing, in the premium going down. So another thing to consider is when to buy option. In buying option, you always want to keep in mind there is different time of the day that you want to buy options. Okay, so sometimes it's good to buy right at the open. Okay, sometimes it's better to buy after open. Sometimes it's best to buy during lunchtime or before the close, like 1 hour, 2 hours before close, or maybe right before close for swing into the next day. Or if there is sudden news comes in and there is a big move going, but with the continuous move, you want to grab it, while it's driving higher. So you should know, like, where are the good times to buy. Buying an option at the open is really, really good when the market is bullish, and it really worked for a lot of people during, this time when it was market was uptrending between end of March till almost beginning of September. It was working always. Deep buy, buying a dip, buying a dip. But you should keep in mind that when the market is turning around and getting bearish and trend is going down, it can it's not a buy at the open anymore, because at the open the volatility can be high, it can suddenly drop, it can suddenly rise. So it's always best to wait for the open to be over, after the trend is visible, after it's you're 100% sure that the market is not suddenly not gonna drop and there is no sell volume coming in. Then you can grab it for holding all day, or holding into next day, or playing for 1 or 2 hours. Another thing is, before this corona, a lot of people worked at the offices. They had an actual job, they had to go to office, they had a boss, they couldn't play with their phone, they couldn't play with the computer, they had to only work. So the only time they couldn't watch the market was the lunchtime. When was the lunchtime? So lunchtime starts at 11 a.m. or 12, but max usually lunchtime you consider between 12 to 1, okay, lunch hour. And that time the market becomes more volatile. Why? Because between 12 to 1 is the lunchtime in the East Coast, and between 1 to 2 becomes the Chicago East, the Mid America, and then 2 hours later we have the West Coast lunchtime, okay, and that time is a market closing hour. So these times there is a lot of more volatility, and there is a lot of up and down, and there can be a lot of sell and buy, which you have to pay attention to the trend and go by that. So we want to always pay attention to these time frames. There is always a lot of money to be made at the open, but keep in mind it's the most riskiest time. Back in the days, I always try to buy after open, and like after 5-10 minutes after open, and then like if it's a good trend, try to sell it during the lunchtime. A lot of times during the lunch was the highest peak of the day, but in the bull market it's possible that during the lunch it slows down a little bit, and then it runs up into the lunch, maybe runs up next day too. But during corona right now everything changed, because everybody's in their home, there's nobody looking at them, so they can just have another computer on the side, watch the market, buy anytime, sell anytime. And there's so many people right now trading, so the time frame's been changed a lot. So anyway, all I want to say is you have to know what is the time frame that you're comfortable to play, and how is the market situation. Right now market is in a downtrend. As you can see, this I click on the SPX, you can see that the weekly is downward, the daily is about to bottom. We may have a couple green days or maybe go down again. Either way is possible. But what I'm going to say is, when the market is downward, you don't want to play grab calls at the bottom, calls at the open. And another thing I always tell people is, always pay attention to the 15 or 30 minute MACD and TTM squeeze before open, to see what is the trend for the market. Anyway, another thing is, when you want to swing a trade, you want to pay attention if how it run and how it close, and what is the target, how far can it go up. I had already a class, if I don't know if you guys attended or not, that showed how to find targets. So if something has more room to go to the target, definitely why not. I mean, and it's closing is strong, like let's say for Boeing opens at 147. It went so low these days, last couple of days it went down to 145, and here open and it started running up and went all the way to 156. This is kind of already near my target. Okay, after hour it went up. We try to assume it goes to 160, and if it wants to run up more, it has room to go to 165, and if it wants to go more, it can go to 170 maximum. Okay, so my maximum target for BA as of today is, for next couple of days, is 170. But can it get there? Can it not get there? Airline industry is dead right now. This is just running based on news. So because there's a news that maybe they're gonna help the airline industry, it may go higher. What I want to say is, when there's a news, you always want to pay attention right away, grab it. But keep in mind, sometimes when there's a news and something suddenly jumps and it stops, it doesn't go higher, or it goes up and suddenly pulls back very fast. So you always want to pay attention to news. When a news comes out, you either buy it right away and you risk it to see what's going to happen, or if it runs up suddenly so big and right now it's too expensive, you want to wait for a pullback to buy it unless it's continuing to run and everybody just grabbing it. So you have, it's really important what kind of news it is. And so if you're late after news, I always suggest don't touch it. Another thing to keep in mind is if you are late to a party, um, it's better to be late, don't go. So what I'm saying is, let's say a name runs so high, and then you feel like, oh my god, I missed it, I want to grab it, I should have got it. You're already late and you didn't make money on it. Just let it go. I mean, if you missed it, just let it be a miss. All right, this is really important. A lot of times a name runs so high, I already missed it playing it, and then I wanted to play and I'm already late and I grab it, and then suddenly when I grab it, it turns around and I start losing money instead of making money. So so another one I wanted to say is when something on news goes up super fast, you want to pay attention to the 1 minute chart. Let me just do this one. I didn't. For example, let's say something is running in the 5 minute. Until the MACD is not dead cross, you can hold it, because once the dead cross, that's the moment you want to get out. So if something is running on the news, you don't know how far you hold it. Just find the target, look at the indicator. Until the 1 minute is not dead cross, hold it, because it's possible to go higher. And it's possible if it goes too high and then you want to lock it. But if you see other indicators are pointing to higher and you don't see a big pullback, it's worth holding more. Maybe it runs more. So anyway, another thing to remember is in the position size is don't play too big that when you win you get scared to hold. Okay, for example, you have a $50,000 account and then suddenly you start playing with the 10,000 on one name in one play, and this 10,000 goes to 15,000 and you're like, oh my god, I'm scared, like what should I do, and blah blah blah, should I lock all of them? Okay, if you're too scared of holding a position for 15,000, it's better you sell like 2-3,000. If you don't still feel not comfortable, you sell a little bit more, sell half of it, just keep half of it. It's still, if you don't feel comfortable, sell all of it. Okay, so what I want to say is don't play too big to risk big, and don't play too big that you miss the opportunities. For example, I had opportunity that I bought 10,000 and I lost for 12,000, and I sold it for 12,000. I was happy with 2,000, but you know what happened? That 12,000 later on was 60 or 70 or even $100,000. So I regretted that why I didn't play with $2,000-3,000, and I would have hold it for 2-3 days, and that would have been 30,000-40,000. You know what I mean? So I could have played with it smaller, but hold it longer, but have a better much return and much more better success. You see what I'm saying? So when you when you bought something and you're making money, don't sell all of it. Maybe the trend is up, maybe it's gonna go higher. Sell half of it, sell 75%, sell 30, sell whatever is you comfortable, and keep whatever you comfortable to hold. So for example, you bought an option for $1 and it goes to $2, and then you're like, okay, should I sell it? Maybe it goes higher, and the trend, the technicals tell you that it's gonna go higher. The trend tells you it's gonna go higher, but you're afraid. Okay, at this point you can sell half of it, keep half, and then you're playing with the bank. You're playing with the bank money. You're playing with the market money. It's free money. So if it get double, you sell half. You took your original money. Now you have, you're playing with half. Let's say you bought 20 contracts at $1. Now it's $2. You sell half. You still have 10 contracts at $2, right? And then the next day it gets double again. You can still sell half of it, and keep half of it, and then maybe next day it gets double again. Yes, there is gonna be a regret why I didn't keep all of them, but remember, you never know what's gonna happen. So I always tell people, remember, in market, regret is our best friend. So when something is going too fast, too high, like remember how Tesla's was going too fast, too high, don't sell too fast, because even if it pulls back a little bit, the option premium can hold it still. And keep in mind, every name playing is different. Okay, for example, I know Boeing, when it goes up, it can have a sudden drop. Like look here, Boeing, look here, it went up and it has sudden drop. It went up, a sudden drop again. It went up here and a sudden drop and it went up again. So this is the regular normal behavior for Boeing. Okay, but other names aren't like this. Okay, for example, Apple, when it starts running, it just keeps running. Look, it didn't give like a big pullback end of the day compared to other names. Okay, or Tesla, sometimes can have a big jump at the open or big drop and then suddenly a big reversal. So these are the things that over time you learn. That's why they always say keep a small watch list and you focus on it, and that can help you a lot. So always have a main watch list and look at that. For example, for me, these are my main name that I watch: Apple, Amazon, Nvidia, Baba, Shop, Netflix, Tesla, FB, Microsoft, Google, AMD, and Square. So these are my main names. The rest is just temporary. I'm playing. Okay. So and another thing that is really important in option trading is you should always have four. There's always four outcome out of each trade. It's either gonna be a small loss, small win, or big loss. All you have to do is avoid the fourth one. So any trade you go in, the result should be a small loss, small win, or big win. All you have to do is avoid the big losses. How? If something is pulling back big, you can sell it and buy it back later. Okay. For example, I had Apple option, and you can see here the Apple the day before. If it shows here, okay. So the day before it was here 109 something 604, and then it opened a little bit up the next day, but it suddenly dropped. So I right away at the open I sold it, but then when I saw the reverse, I bought it back again. You see, what I'm saying is, if something starts dropping, it doesn't, it's okay to sell it, and then if it's reversing, you can buy it back again. You always remember, you can always buy it back again. And another thing is, if something is running and you already sold and you see a confirmation that it's continuing to run, that point it's okay to chase it. But remember, play with the profit. Play with, don't go bigger in for, hoping for a bigger win. Okay, so a lot of time, a lot of people lost money like that. And for entry and exit, you always want to wait for the near perfect setup. What is the perfect setup? The perfect setup is when all indicators are up. That is the perfect setup. The perfect setup is when the 5 minutes up, MACD, the 15 minutes up, the TTM squeezes blue like this, the 30 minutes like this, the 1 hour, all of these are up. These are just perfect setup. You just buy it here and sell it before these blue bars get, to dark blue. So these are the perfect setup to buy. But keep in mind, there is a saying there's an old saying that says nobody ever went broke taking profit early. Okay, so don't always wait for the perfect exit or all the way at the top to sell. If you made a profit and you're happy with it, get out before it's too late, because you never know when a sudden drop can happen. And remember, whatever goes up, it will come down. Whatever goes down, it will go up. So another thing to keep, I'm just gonna read these points. When something moves too much and you're late, better avoid it unless the more run is confirmed. These are really important. Always wait for the near setup, perfect setup. At least the best setup is gonna guarantee that you're gonna make money. And another thing to keep in mind is one of the best time to buy an option is when the MACD and the 1 min golden crosses for the calls, and for the puts is dead cross. So for example, here is something is dropping and you want to say I want to buy. Okay, the best time to buy is here when it golden crosses. Okay, because at least after this golden cross happens, it starts rising up. It pulls down here again, but you see it goes up again. You see my point? So when you are near your target, let's say you have a target like here, I had Boeing here like yesterday. I had a target of 152. It reached it. You see here, it went a little bit up and it pulled back hard. Then another news, I think it came out, and then boom, it jumped up again. Okay, so my target was 152, but I said after this, if it goes run higher, it goes to 156, and you see it run it to it. And if it goes above it, and the the indicator is telling you that it's gonna go, why not grab it? Here you see the TTM squeeze goes from red to yellow and reverse the trend from here to here was a perfect hold. You see here, it was a perfect hold here, but avoid. But then end of the day, you see, okay, it's about to close strong into the strong close. It's gonna have a strong close. It's running into close. So these kind of things, you say, okay, this has a chance to gap up on Monday. And as you can see, after market, it went up to 158, $2 already up. So even if it drops $2 before market on Monday, still you're gonna make money, okay? Because it's running up into the close. Next topic is, another thing is always focus on volume and just look at the volume of the Boeing. You can see that in the morning the volume was okay, it was here, okay? So, and if you just look at the 30-minute, volume were okay, but at the end of the day, volume will start picking up big. And when volume goes up big, means like, okay, there is buy volume coming in. If something is going up and the volume is getting bigger, means these are buy volume, okay? It's not algorithm, it's not short seller, it's people these are not day traders, these are people who buying to hold it, okay? Because the volume is keep rising and it's keep going higher, all right? So another thing I always tell people is let the 15 and 30 min give you the intraday direction. I always, for day trading, I keep attention, pay attention to the 1 and 5 min, 15 and 30, I pair them together, 1 and 5, 15 and 30, 1 hour and 4 hour, daily and weekly and monthly together. So you want to always pay attention to these for the direction, okay? Never forget that. And I always say 15 is a best friend. When you bought something for swing and overnight and you made a big money right at the open and you see it has the potential to run higher, play with the profit. Don't play bigger, don't go bigger, because I've seen it. People go bigger, I've seen it myself going bigger and losing the profit and going into loss. So another thing to keep in mind is when something is overbought, be careful. When something is oversold, same time, be careful. You see here, BA was oversold in the 4 hour. It was not the time to buy here. It was the best time to buy was on the next day when it's come out of the oversold. Okay, so I always tell people like this is an overbought right now. Okay, oversold, right? So when it's an oversold, it's dangerous time to buy put. And keep in mind, when it's an overbought zone, it's always dangerous to buy calls in any time frame, okay? But it depends. Let's say in the hourly is in overbought. That's a good one. Because one thing you need to keep in mind is when a stock goes to the overbought zone, it's not gonna be there for so long, okay? It's gonna be there for few candles and get out of it, okay? So for example here, look, we got to the overbought, boom, it goes and then suddenly get a pullback, goes back up and again pull back. So you have to look at the time frame. Here you see the 15 min goes to the overbought here, goes to the overbought, it stays there and then comes out. This is when you get the pullback. This was another good, so if you didn't have it, you're not gonna, it's not good to buy it here. You want to wait until it gets out of the overbought zone. You get a good better entry before it jumps in there again. You buy it there. And if you miss the entry, always wait for another entry. Don't buy it because you never know if it's gonna run higher from there or not. Always wait for a good entry. And as I said, you want an entry that the 5 min is uptrend or is about to golden cross, and 1 min for sure the MACD one before the golden cross. Another thing that In option trading, I tell you what, I traded since 2000, I think 10, and I lost personally, I think close to $500,000 until I met Option Sniper. I found Option Sniper on Twitter and with other people. I learned so many rules in option trading that it helped me a lot to find how to avoid losses, how to book profit. This guy, Option Sniper, he has a top tweet, which is just great material, and it just goes down all the way, and you can learn so many things from him. Okay, he doesn't post anymore, unfortunately. But what I want to say is, in option trading, you want to have rules for yourself. If there is no rule, if you always just play with assumption, like I've seen people right now, Apple has 112, and people tell me, oh, it's gonna be 150, it's gonna be 150. Okay, good luck. It may be, it may be not. Okay, I saw Tesla, people calling when it gets to 500. People say, oh, it's gonna go to 600, 700. Yes, it may go, it may not, but who knows when it's gonna go there? The question is when, because when you're a stock, when you're an option trader, the most important question is when something is gonna get there. Okay, um, so what I'm saying is, it's just really important to have rules for yourself. Okay, don't play by assumption. I play by assuming what's the market can happen, and I lost a lot of money. That's why I started learning technicals and market psychology, which I will get there. So I'm performing much better. All right. So another thing is, use alerts. Okay, for example, the beyond that I mentioned to you. Let's say, Visa. Okay, let's look at Visa. Visa was actually very interesting. Um, Visa was a name. It's a very huge, big company. Okay, but it never went above for a long time. Let me just zoom out here. You can see here that it went here at 2. The high here was 2014. Okay, 214. Okay, so and then it was funny. During this uptrend, the market reverses after Corona, the beginning of Corona. It has stayed in a box. Okay, it has stayed in a box of 202 to minimum of 188 here. Yes, so it stays in a box up and down until here. It suddenly get to the top, and then it broke. When it broke it, you can see here rise all the way to new all-time high and pull back. So this was the time people played it. Okay, so you want to pay attention. Like let's say here was the all-time high 202. You put an alert very easily for 202 or 203 above it. Then once you get the alert, you buy it, you hold it for a couple of days, you bank money. So use alerts always. And another huge rule in option trading is, when something is dropping and you have a position against it, like let's say you have a call and something is dropping, book the losses sooner. Another big lessons that I wish I would have listened to a long time ago is, do not average down on a losing trade. I even have a sign on my wall that says that, do not average down on a losing trade. It's really important. I lost sorry. I lost a lot of money. Let's say there is an option you buy at $5, and then you are already in it with 5,000, and then suddenly it goes to $4. You're like, oh shit, it's $4. So I'm sorry, my language. You add a little bit more to it, $2,000-3,000 more, and then you say, okay, my average right now is 4.5, like four and a half something, and then the option goes 3.5. You say, oh shoot, then you add more to it, and then end of the day the option price is at 3 and your average price is like 4.2, because your initial purchase was big, right? So your average down, you add smaller and smaller, right? So what's gonna happen is your average is 4.3, for example, but the option price is $3 now. And then what? You'd be holding a big position which continues going down. And right now you're so much emotional attached to this because you already averaged down 4 times, and your initial loss, for example, was $500, which you could have get out when you averaged down first time. But because you averaged down now, your total loss is $2,000-3,000 because you just keep averaging it down. So what I want to say is, if something is going down, just take the loss, buy it back at a cheaper price when you get a confirmation for reversal. Do not, just listen from me, do not average down. Another thing is, when you day trading option, for my strategy, I always say, everything is day trading unless end of the day, you decide to hold it or keep some of that for swinging and stuff. All right. So another thing to keep in mind is when you win big in the stock market in the option, take a break, chill down, take a slow down, because I've seen it for myself. For many people, when they made a big money, they played bigger and they end up losing much bigger. Okay, so when, for example, you had a 10K week or you have a 10K day, and then don't play the same size the next day. Don't think like, okay, tomorrow is going to be the same, because when everybody's winning, remember, market always starts beating back. When market gives money out, then at some point it says, okay, now times to people give money back because I'm out of money right now. Okay, and reverse, when it takes money back from people, they say, okay, now I have too much money, now I want to give some back. All right, so that's how it works. And in option trading, when you play bigger and you have a bigger account, and you can afford to buy more contracts. Let's say you have 20 contracts, 30 contracts, and something is on the rise, you can progressively start locking contracts. Like, let's say you sell 5, sell 3, sell 2, sell, keep selling until you feel like, okay, now this is the position size I'm comfortable to hold, like 10 of them. Then end of the day, you say, okay, I think I'm gonna hold it. You sell 5, but you keep 5 of them for holding overnight. Okay. And another thing to keep in mind is, you should know the technicals. Definitely, I suggest learning technicals. Technicals tells you when is the best buy, when is the best time to sell. Okay. And another thing, as I mentioned before, is the BB. In the Bollinger Band, never ignore it. Like, let's say here, you see the Bollinger Band was just, let me just zoom out here a little bit. You see here, Bollinger Band become flat. So here, it goes into a range. Then it breaks and goes for a new all-time high. Okay. And it's really important, how is the Bollinger Band? Is it above it? Is it at the bottom of it? Okay. Another name to pair with VA is NA, the MasterCard. Okay. So for example, if Roku is going high, you pair it with Netflix. It's possible Netflix goes high. If Visa is going up, then it's gonna grab up, the MasterCard too. Keep that in mind too. So for example, you see here, this one broke the top and then boom, it made a new high too. But because Visa was more under attention, everybody was playing Visa. Another thing to going to next subject. Oh, in option trading, a big thing to pay attention to it is other noises. Okay. In the FinTweet, in the Twitter community, option trading and stock market, there is so many noise. I can just show you guys like my Twitter feed. There is just so many people. Like, let's say I just put here, I just put the $. Let's give me a name, Apple. There is so many noises. Okay. There is just like somebody says, oh, this is gonna happen. Oh, this. I run this, I did this, oh, this is my target, that's my target, look how much money I make. You can use any symbol name, put it in Twitter and see other people's opinion. There is so many things out here. This guy says it's gonna be green, it's gonna be red. It's just, what I want to say is, in the internet, there is so many noises. Somebody says, oh, this is gonna happen, that's gonna happen, this is gonna run up. But always keep in mind, people are in the market to pump the market. When they come and tell you, oh, Apple is gonna go up, that means they already have the Apple. They want their followers to go buy Apple so their position can go higher. Or reverse, if they have a, if they're shorting something or they have the put, they all will come to the market and talk so much negative about it because that's what they're holding and they want it to go higher. Or some people have opinions but they don't have a position. So what's the heck, why you would say something that if you don't have it, you know what I mean? So just ignore others people's opinion, okay? And you see somebody comes and posts, oh, I made this much money, don't let that hurt you, because he never comes to tell you how much money he lost before he made that much, okay? I can have 20 lose trading but then make one big trade win, which it doesn't cover all those losses, but I can come show all Twitter, oh look how much money I made. Okay, so just don't let other people influence you, and you don't know their risk tolerance. Okay, somebody's holding a position and is going into loss. You don't know how big they're playing. You don't know what percentage of their portfolio is. You don't know how long they want to hold it. You don't know if they're just playing for fun. Maybe they made $20,000 that week and they don't care about losing $1,000-$2,000. Okay, so that's why it's very difficult to follow other people. You should have your own strategy. You should know your own play. You should know how to play instead of following other people, because following other people can sometimes drag you to a trap. I always say, if other people are winning, is none of your business. Okay, if somebody made $5,000, somebody made $20,000, somebody made $1 million or six figure, or a big percentage 5x, and comes to you say, oh look how much I made, don't let it bother you. It just, he did it, whatever, good for him, be happy for him, say congratulations. Don't be jealous, don't let jealousy comes to you, focus on your own trading. And if it's bothering you, don't talk to those people. Some people just want to brag about, oh wow, look what I did, look what I did, this or that. Just ignore those people. Okay, that's all I can say. Man, another thing to say is, don't change your plan because other people trying to pursue you to follow their plan. Okay, if you are a day trader, don't focus on becoming a long trader. If you're a long trader, don't become a day trader. Okay, know what's your strategy, know what's your play, and play that, because you know what you're expert in. Somebody might be more expert in penny stock playing. Somebody might be good with the healthcare stock. Somebody might be good, playing just the ETFs. Somebody might be good, just playing stocks. So it's always good to try other strategies, see if it works, but stick to the strategy that works for you and makes money for you. Don't change it until you're sure that you found something better, or something that works better for you. And another thing to say is, when you get later on, when you grow your account and you advance your account, yes, for example, if Boeing is jumping, you can say, okay, this Boeing is jumping, so I'm going to buy an option for next week, I'm going to buy an option for 2 weeks out, and I'm going to buy an option for 1 month out, because maybe I want an option to hold the option for 2-3 days, and then maybe it's continue going higher, I hold the monthly option. So these are just type of advanced play in the future. Okay, I still personally, I tried a couple times, it didn't work for me, I lost, so I'm not doing it yet, but it's just a suggestion. And another thing is, if you have a option that, you have a long-term option and you have a short-term option, and the trend is turning for a name toward down, it doesn't hurt to sell the long one too. Sell the long one and buy it back later at a cheaper price, right? So as I said before, just always avoid buying early. Wait for confirmation. It's better to be a late buyer than buying something and suffering the losing game. And don't try to be a deep buyer. Wait for confirmation. Wait for the run. Okay. Um, One more thing that in the stock market is one of the biggest enemy for every trader is greed. Greed is a big issue. I always say, in the stock market, in trading, there is a couple things that it's it's an enemy of every trader. Number one is greed. Number two is hope, and there was another one, fear. Yeah. So let's focus on greed for now. Greed is good. If you are winning, if you have a winning hand, it's good to be greedy and hold it. Be greedy, that's very good. And if the market is dropping and its trend is turning down, and you're just greedy, you don't want to let it go, you want to marry it, you already married the position, you average down a couple times, and you don't want to give up, yeah, that kind of greed is going to kill you. And market will teach you a big lesson by taking all your money. So as I said, don't let greed make you miss the sell signal, or fear stop you from gaining more win. Okay. At the same time, fear, greed, and hope can be your enemy or can be your best friend. Okay. But all you have to do is have it under control. Greed can kill, but at the same time, it can help you. But the killing is worse than the help. All right. Um, and there's an old saying that I think Warren Buffett says, that be greedy when others are fearful, and be fearful when others are greedy. Okay, so when something, the technicals are running up and it's showing you indication that this is gonna run up, yes, you're hoping for a run up, you're gonna play it, but you're not only betting on hope, you're betting on the indicators. Okay, but if something is consolidating and is not running up, and then you buy something hoping for something, maybe it jumps up, then you know what's gonna happen is it maybe never happens, and then you're gonna lose the premium killing until it maybe reverses and goes down, and then you start losing money. So all I want to say is, fear, hope, and greed, have it under control. It's good to be greedy, it's good to be hopeful, it's good to be fearful, but you should know where to stop it, where to let it out, where to stop you. For example, right now, and we are in September of 2020, and the market is not really that good, so it's really good to be fearful. I've seen many people who holding less position overnight, who are playing smaller position, who are playing much more smaller, because everybody's fearful, they don't know what's going to happen to the election. So all of these at this time is good to be fearful. Okay, but when the market is running, when something is jumping and you are fearful, that's bad. So about average down, I just want to emphasize again, never ever 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 average down on the losing trade. But if a name is running, and let's say you bought something, a small position like 1000, 2000, and something is running and giving you an indication that this is going to run up, it doesn't hurt to average up. Actually, I'm pretty sure not a lot of people thought about this. Not a lot of people did this before. And sometimes there is something running, and people just hold the same position. But if it's a small position and it's at the beginning of the run, you think, why not add to it? If it's confirmed running, average up. A lot of people keep losing in average down, but if let's try average up, maybe that works better. Anyway, it works sometimes for me, but it's still risky because you're making your position bigger. But averaging up is good when you went small in a play, and then you get more confirmation that this is good play. Yes, at that point it's good to average up. About expiration date, an option is really important what kind of expiration you play. So as I said, this is all depends on your strategy. If you have a strategy for long time play, if you go here to analyze trade, you can see here, for example, Amazon and MasterCard. They have option all the way to 2023. That's 3 years from now. That's 2 years and 3 months from now. Okay, so just look how expensive the options are. This stock right now is 331. The 350, the 400 is going for $38. So basically, you're paying a 10% of the stock, more than 10% of the stock, to hold the option for 400C for 2.5 years from now. But as I said, just look at the open interest. There's only 9. Look at just the open interest, so low. Okay, so let's look at January 21. Look at the open interest. So you see, there's a lot of open interest, means how many people open contract and they're still holding it. Okay, so you can see here that this one is a little bit busy. All right, so you want to keep in mind, in option trading, you always want to go with the round numbers. Okay, so like for example here, 350, look, is the busiest one, and you come here, 365 apparently is busy, maybe that's a good level, but 400, you see, is a round number, is busier, and then the other ones are a little bit smaller. Okay, So what I want to say is that always round numbers. Let's look at the near option. That's October. Okay, October, you can see that we have even 0.5 options. Okay, but the busiest one obviously should be 350, which is right, has almost 4,000 volume. And then we go to 370, that has a high volume too, but that's just a lottery ticket. It's like 50 cents. That's just super cheap, and 40 points higher, really not possible to get there. But anyway, what I want to say is, in option trading, know your strategy, play with the round numbers, and if you are a risk taker, yes, play same week options. If you want to play less risk, play 2 weeks out. If you are keep losing money in the stock market in option, and you playing the weekly options like on Friday and Thursday, stop doing it. Just play the next week. If that doesn't work, play 2 weeks out, play 3 weeks out. There is ways to make money. Trust me. If Apple is dropping, buy 2 weeks out, sell at the end of the day for 10%, 20%, be happy. But if you book 10, 20%, 5 days in 1 week, you double your account in 1 week. You double your account in 1 week, that means what? You can double your account again next week. I just want to give you the terminology, like, you can do it, but if you can control your greed, fear, and hope. All right. So as I said, know your strategy, know the position size, know your risk tolerance, and it's always best to play out of the money. But for lottery, it's sometimes better to play in the money for playing on Friday, or like SPY. They have option almost expiring every 2 days, so it's better to pay in the money. Okay, but at the same time, it's risky. So a lot of people, sometimes I see people playing in the money options. That's just to bring their risk lower, and you know, it's just less riskier play. But it's still the chance, an option that when it's out of the money, it has more chance to rise than an option that is in the money. Okay, just keep that in mind. Another subject to keep in mind to want to talk about is the volatility. So it's really important. Volatility index, we have VIX. Okay, VIX is really important. When it's going up, it means the volatility is going up. When it's going down, means the volatility is going down. And usually, when it's going down and is red, means the market is more bullish, and reverse. Okay, but you want to keep in mind, volatility means like how much a stock can move. How is market movements? Okay, so here you can see the volatility of Apple was high here. It's rising. Look how it's rising. Okay, or here it's rising just crazy up. Or Tesla, you know, just look how crazy volatility was here or here. Okay, and all these have effect on the pricing of the option. Okay, so for example, if you look at the Tesla, the IV last week, all of them was above 150%, 200%. It was the IV means implied volatility. Okay, so when the IV is so high, look at here, Tesla is 100%. Let's look at the SPY. Look at here, it's below 30%. Let's look at Apple. I'm just giving you a few names. And here's a new name, it's Snow Stock. Look at here. It was even higher. Now it went lower because it's not moving. And another, you can check any name anyway. I just wanted to show you guys. Let's click Lulu. Yeah. Every name has different. I've seen Infinity. I've seen 300%. I've seen 200%. Let's Telray, I remember, was 300%. When it went to 300, when the stock went to 300. So just let me show you here. Look, Telray went to 300 from like, it was crazy. From 23 went all the way to 300, just a very short period of time, right? And I remember the option was like, the IV was 300%. But look at right now. All I want to say is, you always want to pay attention to the volume, because at the end of the day, it's the volume. Look here, it's the volume that makes everything move. Okay, so Telray come to the lowest point here, 243, and suddenly the volume came in so huge that jumped it up to $10, and since then it didn't go above it. Right? Let's check. So you see, it came above the 10, one time jumped above it, but pulled back again. So you see, the volume is always really important. We always want to pay attention to the volume, to the news, to the trend, to the know when is the slow season. You can identify it by the Bollinger Band. You can identify it by indicators. And premium killing time is really important because right now you can see, let's click on daily here. Like, okay, here, look, it's parallel, it's going in the range. So this is a premium killing time to me, okay? And low volatility, always know it's best time to sell option, but at the same time it's risky because once the trend reverses up or down, you can lose a lot of money, okay? So that's why not so many people sell option. But at the end of the day, the house always makes the most money. Remember that. Another big lesson in the stock market and in the option trading is patience. You always want to be patient, okay? Patient is rule number one. It's always best to wait till the trade come to you, okay? Don't chase, don't buy early, don't buy something for hoping to gap up or go up higher or hoping that it reverses. These are all mistakes. But if you be patient, wait for the right moment to jump in, that's the time you make money. Okay, so for example here, Telray, it jumped up and up and down, up and down, up and down, but here it closed above the BB, okay, the daily BB, okay, Bollinger Band. Then the next 2 days was good, but you don't want to be greedy. At some point you want to get out. If you didn't get out on the third day, fourth day, get out, because 5-6 days it's inside BB and the premium is gonna get killed. Okay, so this is just one example. Be patient, practice. When market is not good, just sit out. Sometimes even market is slow, and like, I know it's not a good time to invest. I paper trade in my mind. I buy something, I say, okay, I bought this, and I wait 5 minutes, 10 minutes, or end of the day, see if I didn't made the right decision at that moment or not. Just to know if my strategy was right, if I'm doing it right or not. Because sometimes market, when consolidate, it can change everything. Indicators may not work, and when market gets weird, nothing can work. Even people who always have a set strategy and they buy, they can start losing money. As I said, market can give money, give money, give money. sorry. But at some time, it feels like it's giving out a lot of money. It's time to take somebody. So keep that in mind. Market always keep itself balanced. As I said, always know when to book losses or when to book gains, and never ever ever hold a losing trade. If you have a trade that you bought it at 5 an option, and the next day is at 4, okay, book the loss. Don't wait until it's 3 or 2 or next week is 1 or near expiration is 0. You could have sold it for 4. Now you waited so long, it's $1 or 0, and then you're still averaging down, and then you keep losing money. So always get rid of losing trade, because it keeps your mind, in a negative psychological um, situation. Okay, for example, if you have a losing trade, you can't focus on making money because you still have a losing trade unless it's super small. But if it was big, you cannot focus on making money and focus on playing bigger because you have a fear in front of you that, oh man, look. At the same time, so some people I heard, like before, like I even did this myself. Like, I bought an option and I played it, and then later on I kept it until expiration date on my watch list to watch it. If it goes up, it makes me very unhappy, and said, and I always regret, oh man, I wish I hold it. I wish I hold it. And then if it goes down, it makes me happy, like, oh good, I did a good job that I sold it. I mean, that's just wrong. If something is going higher, just delete that option contract from your watch list, play another one, and play it until it goes up. If it comes down, play the other way. So just don't hold an option contract in your watch list forever to watch it, see what's gonna happen. Yes, it's good to learn lesson, later on go watch it, but don't keep it all day looking at it and regretting it, why you sold early, or why you didn't hold it early, or why you didn't play bigger, or why you let it go. Another thing to keep in mind is in option trading is emotion. Emotion is another big enemy of all option trader. I have a saying that say, never marry any position. Don't play too big that you get too attached to that you be like, oh my god, I'm gonna keep this forever. Yes, if you're trading a stock, it's good to marry a position. If you have an Apple stock, you bought it in 2007, 2010. I remember 2010 was option. Apple stock was $300. Okay, then right after that they did a split of 1 to 7, and then after that right now they did a 1 to 4. So yeah, it was good to marry at that time because it's a stock. But in option is different game. Time is against you. You're fighting the time. Okay, so this fighting the time, it's as I said, in option you have to always be ready to divorce and marry. This is how option works. You have to be ready to let go and accept. Take it, give it back. Take it, give it back. You have a loss, book it. It's very normal to book losses in option trading. Don't let it go into your way. I have days like, for example, I'm making $3,000-4,000 in one day, and then I have an option that I lose for $200-300. That doesn't let me go down. I booked a loss. I buy another one. I make it up there, maybe or maybe not. By the end of the day, I know I'm gonna keep close the green because I tried my best playing all I can. 1 2 bad plays doesn't hurt. So what I'm saying is just put the emotion out, and one way to put the emotion out is playing smaller. Okay, if you're getting emotional when you play 10,000, play 2,000, play 3,000, play 4,000. I mean, find your size. Okay, bring it as low as possible. Bring it to $500. Bring it to $100. Find the size that you don't care about it. Okay, you don't care about it if it goes down 5%, 10%, or 20%. Okay, all right. So as I say, always be ready to let go. Don't be hard-headed. Don't be stubborn. Okay, if something is losing, if the indicator, let's say for example here. Okay, let's look at here. Let's go to here 5 min. Let's say you have a put. Okay, and then let's say you have a put and it comes down, and right now the 1 min indicator is MACD is golden crossing. Okay, you have to get that out of the put because it's about to go up. If you don't get out of it, you're gonna lose money. All right, so don't be a hard-headed. When you get the signal to get out, get out. Don't be a hope trader. All right. So when you buy something and the setup that you bought it, hopefully it was a near perfect, and then suddenly it pulled back a little bit and it's losing its perfect setup and it's losing its the setup that you like, get out sooner than later. Okay, don't wait for a major drop to get out. If the setup is losing its power, it's losing its strength, get it out because it may be the end of the run. All right, as I said, I have a rule that says that if the run is over, get out sooner than later. You can always buy back again. And if you had loss, screw it, take a break, call it off the next day, or just don't trade the rest of the day, just watch, and tomorrow is another day. I personally myself, whatever happens the day before, next day when I hear the bell, the ding ding ding, market opens, I just forget everything and that's just a new day, right? Can't get over emotion of loss, take a break. Otherwise it will have a bigger loss. That's really, really important. If you have a big loss and you can't get over it, take a long break. Because for example, I had $10,000 week loss and I tried to get over it. Apparently I couldn't get it, and the next week I had another $10,000 loss. So I'm like, wow, you see what I'm saying? So if you don't stop when you're losing, when you're losing money, you continue going on a trail of loss. This is really, really, really important. Sorry. So in a trading, especially when you're in the losing strike, remember, losing can be like a snowball. You drop it, it can drop and get bigger and bigger and bigger and roll down and get bigger. So until it gets to the bottom of the mountain, which can be your account to zero. So what I'm saying is, when you start losing money and it's really affecting you emotionally and mentally, just tell yourself, okay, I'm out. I'm gonna take a break. I'm not gonna touch anything, even market goes up or down. I'm just gonna take a break for 1 2 weeks. until I get mentally ready. And trust me, I've seen even successful traders do that, because you never know what's going to happen. You don't want to lose your capital. You always want to protect your capital. Survival in this market is the most important thing. Um, Another thing in market to keep is really important is managing risk. You always want to manage risk. Yes, you maybe have a $50,000 account. You have maybe $20,000, $30,000 holding. Your risk is so big because the trend is up and you're making money. But end of the day, you say, oh my God, I'm holding more than 50% of my account in option. Then you tell yourself, okay, maybe it's better I do a risk management and sell some of my options, just to avoid if suddenly, God forbid, a big drop happen overnight, I don't lose money. I've seen it that sometimes there is a sudden news, somebody get killed, there's a fight, there's a war, there is something going on, something goes on, and suddenly overnight market turns around, and people lose a lot of money. And not everybody has access to trading futures or optional futures. So what I'm saying is, just be ready, manage risk, and when you win, play with profit. If you had a $5,000 option on Tesla, for example, and next day you made it to 10,000, okay, you double your profit and you already cashed out, and Tesla is reversing and it's going up. Okay, you can play with 5,000 or maybe 3,000, a fraction of the profit. Don't go play with 20,000 more in, and if something, God forbid, goes against you, takes your profit and makes you in the loss territory. Another strategy in a win is roll up. For example, you have like, let's say Tesla is 400 right now, 405, and then you have the option for 430, and Tesla gets to 430. You want to book the 430, use the profit, and then you go and buy the 450. That's called roll up. All right. Another thing I always tell people that I keep saying and keep repeating is, regret is your best friend. Remember, in option trading, regret is your best friend. Get used to it. You learn lessons, right? And you should get in the stock market, in option trading, you should get used to misses. You should get used to a lot of miss. Like, oh man, I miss buying at this price. Oh man, I miss holding at this price. Okay, and I always tell everybody has regret. The person who wins says, "Oh man, why I didn't buy more?" Why the person who has it and it goes higher and said, "Why I didn't hold it longer?" Because he sold it early. The person who didn't buy it, he says, "Oh man, why I didn't buy it?" And he has a regret of that. The person who plays the opposite side says, "I wish I played the opposite side." So everybody, for any move that happens, there is always a regret. The person who buys it, the person who buys less, the person who holds it shorter term, the person who doesn't buy it at all, the person who buys the opposite side, the person who doesn't play it at all. All people can regret. So just, you have to become friend with regret. Regret is just part of the game. Don't let it bother you in your mind. I personally have this big problem before. I'm sure some people have it too. So as I said, have a personal watch list. If you have garbage names, some names that anytime you touch it, you lose money, just don't touch them anymore. Get it over it and delete it. I have some names like that. Anytime I touch it, it doesn't work. So I just delete them or don't touch them at all. I don't care whoever talks about it. So another topic is gambling. In gambling, when you go to casino, for example, you have to sit there and play. A lot of time you cannot sit out. Even if you sit out, you still have to pay. For example, for poker. But blackjack, if you cannot sit out, you have to play. You have to continue playing. Or like roulette, okay, you can sit out. So there's different kind, but it's beautiful. In the stock market, you can sit out. Nobody's gonna tell you anything. You can sit out for 1 day, 1 month, 1 year. You can sit out. Just wait for the right moment. So what I'm saying is, survival is the most important thing. You want to survive. Market is going down. Okay, it's better to sit out, survive, wait for the right moment, then go back in. Okay, because once the market goes back up again, it will go up, and if you don't have money to play, you're out of the game. You know what I mean?
So never treat the stock market like a gambling or casino, because the moment you do that, that's the moment you're gonna start losing money and going all out of money. Because stock market is not a casino; it's a real market. It's like a real bazaar. It's like a real mall. You go there and shop and buy. You don't go there throw money, hoping for making big money. All I'm saying is, people go to casino to go with 100 to have fun, or they go with 100 to turn it to $10,000 or $1 million. Okay, but if you go with the same mindset in a stock market, you can lose all your money. It doesn't matter how big you go in, and you will keep losing, losing, losing until you go broke. And I've seen so many people like that, and I was personally one of those example with so many huge losses. Um, so what I'm saying is, like, for example, before all this question, why some people don't put all their money in one stock? Like, for example, Warren Buffett, if he's so sure about like Apple company, why he doesn't go big in, right? Or like Sony or Disney, when they make a movie, if they know it's a good movie like Avenger or all these movies, why they partner with other companies? Why they don't, own the whole movie and collect the whole profit for themselves? Why? Because this is a big lesson. Never ever put all your eggs in one basket. You never know what's gonna fail. You know, people don't listen to this advice until they personally experience it. I will tell you a personal experience myself. I had $50,000 in my account, and I think I was like 20,000 in Facebook and another company. I think it was Apple options, long options, and then it was I saw the market was bad news, turning down. Pre-market was future was down, so I decided to buy puts, and right away at the open at right way at 9:30 when market opens, I wanted to buy 20 options. The price was like $5, and 20 option of SPX, which I was like, it was supposed to be $10. Okay, and then $10,000. All right, total. But what happened was, um, I was stupid. I purposely actually, I put a zero in front of the 20, and I put 200. Okay, and when market opened, they sold it to me at 8. Okay, so 200 times 8, that's like $160,000. So as soon as market opened, my account went from positive 50,000 went to negative $100,000. And I was honestly surprised, because I traded option before that for like six. This was 2014, so I traded for 4 years, and I never seen an option goes through like that. I was surprised. I did it on purpose. I put a zero. I was like, let's see what's gonna happen. But it was a very very huge mistake, and it made me bankrupt. And that was all my money, and I filed bankruptcy after that. That's the end of the story. Bankruptcy. That was all my money. And but what I want to say is that I didn't think that's gonna happen. I did it for fun. I put a zero. I said, okay, this is gonna get ignored by E-Trade, but apparently the order went through, and they executed the order, and then all day long the market was pre-market was downward and was about to go down, but as soon as the market opens, it starts going up. So if I would have buy the opposite way, yeah, if it would have get executed, I would have been a millionaire that day. But what I want to say is, I did it wrong. I put all my money and I made a huge mistake, and my mistake turned to a worse mistake, and I lost all my money. So I learned that day to don't put all my eggs in one basket. So this is just a personal story. And anyway, if you don't have the experience that losing everything, just make sure you never do it, because it can happen to anybody. Just learn from others. Going back to the options, never ever risk big to make big, because you may lose bigger. Okay, so one time I remember market was very good, and was on the edge to turn around, and I said, okay, one more day can go up, and I went in with 20,000, and boom, next day market exactly that was the day that turned around and went down, and my 20,000 next day was 10,000 down. So, and that had a huge effect on me. So what I was like 20,000 was out of my league that time. Okay,
So I normally don't try to hold more than 6 or 7. And what I want to say is that, know your position size. Don't go too big to make big, because maybe that time you're gonna lose much bigger. So just keep remembering, slowly and steady, slowly and gradually. There is no rush to get rich. Forget about it. Just slowly and steady. Had a big win, take it slower. If you be just more careful. Don't let, if you have a big win, if you have a good positive day, don't become a riskier player. Don't try to say, oh, I had a good day, I made big money, now I'm gonna play bigger. Don't do that. That's just, I've done it personally, and it's completely wrong. If you had a big win, don't treat it like, okay, I have now extra money, I can risk bigger to, but then you book losses. Okay, if you want to risk bigger, risk, don't risk bigger, risk with the profit, but risk to win money, don't risk to lose money. Okay. And another rule that I keep repeating is never ever chase. So if something is, you made money on it, just be happy with it. Unless rare cases is running more, yes, okay, chase, but smaller, please. You made money. Be happy. Don't give it back with the higher risk. Never forget that. And another thing I want to tell you is, at the beginning when I started trading, I started listening to this CNBC, and man, I lost a lot of money. So CNBC is a really, really money taking machine. Sometimes it's good, sometimes it's bad. But what I want to say is, they are built to manipulate the market. Okay, so they are not built to help people. They manipulate the market to tell people what to do, so people can do the opposite of the stuff. And I'm sure there's some evil hands behind it. Anyway, I don't want to go into conspiracy and stuff. What I want to say is, just avoid noises. Okay, and just don't gamble, and don't listen to don't play and earning plays. Okay, I'll tell you my biggest mistake. One of my biggest mistake in earning. It was a Google earning in 2010, and I was so new to option trading. And they said, oh, okay, and what was it? It was two. It was Google was 550 before the split. Okay, Google did a split 2-1. So it was 550, and they said, "Oh, how much Google is gonna go up? Was earning the next after hour, and blah blah blah." So I had $15,000. I bought all Google call, and CNBC was pumping that Google is gonna go up. Guess what happened? Google reversed 10% down. It went to 500, and I basically lost all my money. Okay. After that, I learned a lesson, and also listening to other experienced people, that just don't play earning. Unless if you play it, just know it's gambling. Okay, know that it can't go to zero. Know it's gonna lose money. So just know that earning play is a pure gambling, and just try to don't play it. Wait for it before it play. If you can afford the high expensive option, play before it if you can. And then after the earning, always be careful. The day after, the premium can get killed very easily unless the trend is up and is strong. Okay, so it's better to wait 1 day or 2 days to grab long or play that time. But be careful. Whenever there is an earning for on any name, the day after, if there is no volatility, if there is no running, if there is like opposite run, the premium can die very fast, and they manipulate the premiums big time, the market makers, because they try to find the right price for the premiums. All right. So anyway, for swing trade, always keep in mind to don't play too small, that if you win you regret that why you didn't play bigger, and don't play too big that if you lose it blows your account. Okay, it hits you so hard. Play, you have to find your size. And keep in mind, cash is always king. It never hurts to stay cash. Don't listen to people, oh, scared money doesn't make money. Scared. Yes, survival is more important than, losing money. Okay? Practice staying cash. Okay? Buy more time. Judge based on 1 hour, 4 hour, daily and weekly. Don't pay attention to other people say, oh, this is going to run up. If you are swinging, buy more time. Buy 2 weeks, 3 weeks. Don't on a Monday you can buy the next week option just to be safe. And if on a Thursday, don't buy option expiring on Friday, because that can be zero next day. It can be
half the price of what you pay if it opens down. You know what I mean? So another thing to consider is ignorance. Sometimes it's good in the stock market to ignore, sometimes it's bad. If something is running up, like for example Tesla was running up for extended time, don't ignore it. You don't want to ignore something that's running and regret it later, like why you didn't play it. Okay, play it different phases. Play, at least you say I was part of it. Okay, but sometimes it's good to ignore. For example, I lost money on the Intel INTC, and I tried to play it a million times, a couple times, but you see, I should have ignored it because this is not moving at all. Just look at this thing. Let me just bring the daily. For example, look, since it falls, it had 1-2 times that jumped. It had only one time actually that jumped, and then it slows down. It came back to the bucks. You see here. So these kind of names, you just gotta ignore it. Just leave it there. There's nothing happening about it. You wanna put an alert. Like let's say I put an alert for 50. 50 is already as 50. So yeah, 51.74. This would be a good place to alert. So you just add an alert, and that's it. Let's do, yeah. You just create one alert, and you can move the alert up and down. Once it passes, the application tells you, it gives you alert. Then you go look at it if it's a good time to buy. And even though you look at here daily, it's kind of a good time to buy actually. But you want to wait for more confirmation. Why? Because just look here, the weekly is getting better, the daily is better, but you just want to make sure it gets out of the box. Once it gets out of the box, it can run up to 54. This is just one example. Okay, but all this period here and here was just ignorance. You should have ignored. Keep in mind, when market when goes up, it can goes up on the stairs slowly and slowly and slowly and slowly. But when it drops, it can drop crazy, because market take the stairs, goes up, when it comes down, it takes the elevator down. Boom. Here, look, in couple days, just 3 weeks, look how much it dropped. It was just significant, It's just a little bit too much drop right now. Everybody hope for a sooner bounce, but so far it's still dropping. Let's see how it's next day. So far, futures are good. Anyway, back to this course. I'm on the last page of the presentation. Hopefully, I keep it up to 2 hours. As I said, in option trading, I learned technicals, indicators on all time frames, Fibonacci, and no assumption, and don't think about other people's minds, because that's the way it is. I learned that in order to beat the market, you just need to know how's the market going to react. If everybody's talking about Apple, if everybody wants to buy Apple, and that's the trend, okay, that's the trend everybody's talking about, and that's what's going to happen. If everybody's talking about a market is about to fall, and market starts falling, then it will really start to fall and fall and fall more. So what I want to say is, if everybody has a target like Fibonacci, like let's say they have a target of this, and it reaches there, so that's the time people are going to start booking profit. Like ZM, people start profit at 500. They book the profit. I've seen some people book the profit, and after that they pull back. Now, it was a good buying opportunity. It might go higher again. Okay, so all I want to say is, you need to know how people think, what people talk about, and what people use, tools they use to predict the market. Because once you know what people think and what people are planning to do, that's the way you can start making money. That's why I learned Fibonacci and indicators, and that's how I can predict the movements. Okay. One more lesson I learned from a good friend is, if you are a net player, net profit, net gain. So, for example, beginning of the month, you start with 30,000. You go up to, in middle of the month, you're up 40,000, and then you go maybe to 45. Then at the end of the month, you lose money. You come to 37. Yes, it's upsetting that the last week you lost money,
But think about it. 3 weeks you made money and you close your month's green. So you should be a net profit person. You should look at the net profit. A lot of people come to me and they're very upset that they lost money in September, and that's very sad. But just look at it. We all had a great year. A lot of people made a lot of money in all year. Just 1 month's bad. You shouldn't let you bother you. Yes, it's bothering. It's not. It's sad. But at the same time, this is how it is. You should look at the whole picture. Don't look at 1 day or 1 week or 1 month's rent. Just look at the whole picture, how your performance was, because that's what matters. What matters is that you should learn that there is losses and you should be okay with it. You cannot win forever. That's the whole bottom line. Another thing to keep in mind is over trading. Do not ever overtrade. I've done myself like 40, 50 trades per day, and trust me, I lost instead of making. At the end of the day, maybe I was even, but I think Thinkorswim made more money on me on commission than I made on the profits. Okay, so a normal day, I would say like it's 5 trades. It's a normal. Getting to 10 is a little bit extensive. That's day trader. But what I want to say is just over trading is a big mistake. Know your limit, and maybe 1, 2 is enough, and don't play big. And just know when you do too much, you can have a bigger loss. All right. Another thing, I told you about my $150,000 loss. One of my good wins, I had couple beautiful wins. One of them was Apple, and in 20 minutes I made $50,000 from 30,000. So I made total 80,000. I mean, I put 30, I get out at 80, so I made 50,000 net in 20 minutes. And that was the earning date on Apple, and that time was playing riskier, and I just went all in. But that time was a risky play. But going, forward, recently, one of my big win that I tweeted on my tweet is the Tesla, and that was actually a very well played. But I regretted that after that I didn't play it well. And anyway, going to that play, I noticed that the last time Tesla went up was that after earning that went 10% up. I noticed the last time that happened, 2 3 days after that, the next week it went up another 10%. So in 2019, when I noticed that Tesla jumped 10%, right away the next day I bought option for next week, because I assumed based on historic chart it can go another up 10%, which on that day on Friday it exactly went up 10%. So what I'm saying is always pay attention to historic chart. History always repeats itself. Another one I had was on Apple. That was a good win. Was very risky. What happened was I waited. It was a good Green Day future was good. Setup was good on all the indicators, and Apple got upgraded by J.P. Morgan, and the trend was up. So in the morning I bought the options, and the next day I sold it, and I think I went with 10,000 in, and I got out with 35,000. So I netted 25. These were one of my beautiful wins, recent ones. But after that, I changed my strategy. I'm mostly right now momentum trading. I try to collect small wins instead of having one big win. Because I tell you example, after that 30,000 I won Tesla, my mindset changed that okay, this is gonna happen again and again. So I start playing other places, other names, and it didn't happen, and I end up losing the whole 30,000. It's very sad, but it happened. So I learned, play smaller, try to book $1,000-$2,000 a day. It's better than losing 30,000 and making 30,000. Just go steady and slow. Just getting to the last points. When you make money in the stock market, always move profit to the bank. Don't grow your brokerage account. If you go to casino and you go with some money, with let's say with $100, you turn it to $10,000, and you grow it until you don't put that money in your pocket, you don't take it out of the casino. That money is for casino, because you're still there and you still can play it. They can trick you, they can bring girl to you, they can make you greedy, they can make you happy to bet more, blah blah blah. What I'm saying is, when you make money, take it to your bank account. Until it's in the brokerage account, you can risk it,
And if it's in your brokerage account, it can change your mindset that, oh, I'm making good, now I can play bigger. And you play bigger, you end up losing bigger. So just know that, don't change your risk tolerance fast, because if you change it fast, you can lose bigger. Don't change your position size too fast, because you can win too fast, but you can lose too fast too. All right, so keep that in mind. Grow your bank account, not your brokerage account. And there is another thing to keep in mind is that the stock market and the charts are your best teacher. The stock market, the charts, the indicator can teach you the best lessons. That if after each day, that when the market closed, go look at the charts, go look at the indicators, say, okay, when this blue bar goes down, what does it mean? Okay, this is staying, it's still flat, but this bar is going down. Okay, so that means I have to pay attention to the hourly chart. Okay, I don't see any big drop. This is not dead crossing. This is still holding up parallel. Okay, so that means I still hold the position, So you can only study these bars. Okay, say, oh wow, look, from red went to yellow, and the bar is keep increasing. Now is blue, so that means there's an uptrend. Okay, so these are the things you want to study. Like look at all the how these indicators work, because once you be able to learn to read these, then you can bank money. All right. Have your own plan. Be ready always for unexpected. If you are playing bigger, have a hedge, and have a set rules. Write the rules. Like I spent a weekend to write this presentation in the PDF, and these are most of my rules. And you should have your own rules. Maybe all these things that I talk, maybe 20% of it applies to you. If it applies to you, write out your own rule, put it in front of your eyes so you can see it, so you can avoid it. And if you make that same mistake again, at least you know where to point out to, where you look at it, and where was your mistake? What rule did you ignore that caused that to happen? I hope you understand. So another thing is, you should know your personal habit. Let's say you have a habit that you like to hold something. You're a habit that you don't like to give back so fast, or you don't want to risk too big, or you're not a you're a procrastination person. You push back things. You try to delay things. All what I want to say is the stock market will teach you your best. It will tell you your best thing about yourself and your worst thing about yourself. Once you learn yourself, you should change yourself. If you don't change it, whatever is happening in the stock market, winning or losing, it will keep happening. Okay, so you should you should make yourself a better person. That's all I'm saying. And same thing in the stock market, you should focus on making yourself better, and especially in investing, because you want to grow. You want to grow bigger and bigger. You don't want to stay in the same level. So get to know yourself. Make changes to yourself in the future. When your account grows, you want to be able to practice other strategies, see what is working, what is not working, because you're not going to stay in the same level. If you have $10,000, if you have $100,000, you will get to millionaire. You will get higher and higher. Once you get access to more money and more funds, you want to be ready for more investment, for more how to take more risk, for how to make more money and stuff. And the last thing I just want to talk about is psychology. Psychology is so much important in the stock market. You want to know how other people think. When Amazon goes, when Tesla goes to 500, okay, and suddenly pulls back, means what? People had the psychological of 2,500 the price before a split, okay, or like Google, it goes to 1,700. So it's the round numbers. It's a big psychological number for people. Okay, this is number one. And another thing is, when the market is running so high, for example, QQ, it's so interesting. It went to 300 and it pulled back hard from it. So hard. It went a little bit above it and pulled back. So this was like a psychological number, 300. Oh my God, 300. So, just always keep in mind, market cannot run forever up, cannot run forever down. At some point, it always gets oversold. At some point, it gets always overbought. The worst thing can happen to stock market if it stays flat. Okay, at that time the best thing to do is just sell options. But even when the market is flat, selling option is not worth it because the premiums are so low. So market always is gonna have volatility due to news, due to earnings, due to lots of factors that's involving company actions. But and we see right now market is breaking up in the futures. So what I'm saying is just be adaptive to market strategy. Be ready when the market is rising. Be ready when the market is going down. Be ready when market is telling you to get out, or be prepared to when the market tells you to get in. Okay, all you have to do is just be adaptive to market strategy. Be prepared to what's the best to do. All right, and just have rules, avoid losses, be prepared for unexpected always. And I'm gonna share this PDF. It's in Google Drive. I will put a link under the YouTube. You can click on it, open it, and look at it. And any question, anything you have, you can always email me. I would love to reply and help you guys. So hope this helped. Thank you and have a wonderful one. Hopefully. Thank you. Bye bye.